Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is Good Friday. I want to welcome everybody to a nice day of trading. That is, if you're not trading stocks. The stock markets here in the United States are closed. The commodity markets have already kicked off for the day, and we also saw an early halt to trading in the bond markets. That's key. Right now, there's a lot of sentiment pointing towards a weaker U.S. dollar. Those bond markets have been incredibly active as everybody prices really interest rate expectations that are all over the map. Today, we're going to go ahead and give you a quick primer on how to trade holidays or how not to trade holidays. We've got some trade ideas that have gone live. I've got one brewing here in the Australian dollar, US dollar for early next week that I want to start off by outlining. We also have a play in Tesla that I'm looking at. I think next week could be the week if we get a chance. Also Netflix. We had a Netflix play that's gone long. And we've also got really a big time key level in the dollar yen. And we're going to go ahead and break down what holiday trading is, probably why you shouldn't be piling things on today. But we're going to get you set for next week's trade. I'm excited. We got a full slate of live streams next week. We're going to go Tuesday, Wednesday, Thursday, and then potentially Friday on a different platform, and I'll tell you more about that when the time comes, but it's very exciting news, so I'm excited. Team Arena, good to see you. Team Arena, just me. Always a pleasure. Just everybody that's joining us out there in YouTube land and here in the How to Trade trading room on Twitch and on X. I want to say happy Good Friday to you, and have a great Easter weekend, and we're going to go over exactly what could happen this weekend and why Monday is going to be an interesting day in the market. So happy Friday. Okay, here we go. Let's go ahead and get started here. We got a trade idea that I put out a little bit earlier today, and these are our actionable trade ideas at How to Trade. You head by the trading room, you sign up, you give my picture a click, you follow me, you get these beamed out to your email inbox, and they don't always go live, but when they do, we've got a pretty darn good record this year. We had a no-loss January that was fantastic. Unfortunately, I was out on holiday. I was down at the beach for probably the biggest week of trading in recent memory, and that was last week. So definitely pay attention to these if you're interested in actionable trade ideas. If nothing else, they'll get your mind working, and that's what we're looking to do here. So this is converging indicators in the Australian dollar, US dollar. I love converging indicators. I don't typically like to trade a 50% Fibonacci retracement. Anybody that knows me, y'all know me. You know how I make my living. I don't trade 50%. But when my 13-period EMA comes down on top of my 50%, that's going to be a big-time resistance zone. And right here for the Aussie, I think we're primed and ready potentially for a trade, probably on Monday's trade. So we're going to go ahead and break that down for you in a second. Sherry, I love your orb strategy. It's been working great. Thank you, Sherry. Sherry, I'm sorry about the names, guys. I'll do the best I can. This is an environment with stocks where that orb strategy can be huge. But I really like those 4-hour orbs on the Forex. Those are pretty good as well. Let me see. Team Marine, how was the vacay? The vacay was great. I got a little suntan. I went on sort of an eating vacation. The wife and I, we sort of ate our way through St. Augustine, Florida. We hit all the restaurants. So I have been cutting my calories this week and doing a lot of cardio because I was definitely well fed. I was well marbled coming back from Florida, but fantastic. A big shout out to some of the folks we met down there, some of which are probably watching the live stream. You guys were great to us. Absolutely. Abram, great to have you. Thank you, Abram. Always a pleasure. So yeah, Team Marina, great vacation. All right, guys, this is going to be our trade idea. I'm watching this one closely like a hawk. That's the old cliche, but I really like this one. 50% level, 50% retracement. Now, this is my own strategy that I use. It's the Fibonacci counterpunch. It's inside of the How to Trade trading room under our elite our elite trading series. You can find all the rules there, but really it's very simple. We go from a spike high to a spike low. We run our retracements. These Fibonacci's give us potentially resistance levels in this case, or support levels in an uptrend. Resistance is right there, 64.28. Now, I don't trade 50%. I hate 50%. I've lost money over the years. I stopped doing it. I've watched people lose a fortune, small fortunes, trading the 21% and the 50% levels exclusively. I love 38. I love 62. I love 78. I am not a fan of 50, but I'll tell you what, I'm a fan of my 13-period EMA, and we've got a 13-month exponential moving average that's coming right down on top of that 50% level at 64.28. That's a big-time zone. I'm excited. I like that level. I think we're going to get a pretty good sell there. So go ahead and check out our trade idea. Gives you the entry point. We're going to be a little bit more aggressive here, selling 64.19s, and we're looking for about 40 pips payoff. I get the question all the time, Shane, my stop loss, what should my stop loss be? Stop loss, a lot of these will manage on live streams once they go live, once the trades do develop. but your stop loss, I would set it at a 1-to-1. That's what the trade's designed to do, and I think risking 40 pips here to make 40 is a pretty darn good trade. If you want to try to stretch it into a double and make 80 or 120 pips, that's your business. I can't advise you what to do. I just know what I'm going to be doing. Let me see. Yeah, absolutely, Abram. I'm looking for our risk versus reward. Shari, I was in Florida too. That's fantastic. That's great news. No, I love Florida. Florida's fantastic. Northern Florida up there, St. Augustine. Really enjoyed it. Really enjoyed the Daytona area. Just had nothing but good experiences down there. And I love the food. God, the fish, the food. It's fantastic. You don't get that here in Montana. If you want to trade any of these trade ideas, check out switchmarkets.com. They've got all sorts of different bonuses for you. If you're an international client, if you're one of our clients here in the United States, reach out to me with a private message, and I'll go ahead and direct you towards one of our recommended traders here in the States, one of which is Awanda. Also, IC is another one. So you definitely have your options here. Just if you need to ask, just go ahead and ask. All right, we got another trade follow-up that I do want to cover right away, and this is Tesla. We talked about this a lot. Tesla daily 920 EMA crossover buy in view. And I've been scoping this one for a long time, since before we went on the holiday, and you can see what's happened. I really thought we were going to get that cross and buy right in there. Didn't get it. Coming off, coming down. So we're still in a holding pattern for this trade idea, but I am optimistic that you will eventually get a crossover. Full disclosure, I want the crossover to develop down here right around 185. I think that if that occurs, we'll have to call the folks out. I'll have to blow some of the dust off of my Robinhood or my Scott Trade. They don't even have Scott Trade anymore, my Schwab account, and maybe take a shot on some Tesla, because if you look at the monthly technicals, all right, you had sort of a buy there. And this is our coded 920 strategy. If you haven't watched that video, check out our YouTube channel. But this yellow candle means buy, right? So you got a fantastic trade right there, 262 all the way up to darn near 500. You almost doubled your money on that last buy. Now this buy right here didn't fare so well, but your loss was relatively small. We came back down, and now we're starting to get into interesting territory. Now, the reason why I want the 180 entry point is sort of combining my Fibonacci's with the 920 is going to give me an opportunity to place a high probability trade. And that really is what it's all about. You can see right here, we're having trouble at that 78% retracement. Now let's dial it in exactly of this range of August of 2024 spike low to this euphoric high of December right after the election, when looked like Elon Musk was going to get a lot of favorable treatment from the upcoming Trump administration. And now you're seeing really the pullback and the sell-off and just sort of a rescission of all that euphoria. That's why we're traders. You could have made a lot of money just trading this. However, if you bought right here and you're holding this for a long-term investment, it just isn't that great of an idea in this environment, especially with Tesla. We're looking to trade. So what am I looking at right here? My 78% is sort of the line in the sand. It's the last bastion. If that thing breaks, and it looks like it's breaking, we're probably going to head down there. And why do you say 182? Well, I'm not a smart money concept trader. I don't really believe in them. But I can't ignore that order block right there that developed really through the first 6 months of 2024. I think that's a pretty darn good level where we're going to get some bids. In my opinion, we're probably going there. Now, that's another $60 down the queue. That's another big loss. I think we could get down there and bottom out before these markets actually begin to turn back. And it's going to take a lot to really turn Tesla stock around, but a lot of it's going to depend on how the economy develops for the rest of 2025. If you start to see no recession, if you start to see economic growth and spending and consumer confidence and all the things you want to see, then odds are Tesla is going to rally. I still think it's a pretty good company. I think that the ability for Tesla, not just to make automobiles, but to sort of diversify into other areas. You see the Tesla houses they're building, those little smart houses. I'm always interested in Elon and SpaceX. I'm always interested in SpaceX because once they can figure out how to lasso a meteor, they just became probably a global leader in holding gold bullion. Those things are made out of gold and platinum and really rare earth minerals, which are going to be incredibly valuable. Some of that valuation will spill over into Tesla. So I see a lot of upside for Tesla, but I understand why everybody's scared right now. I get it. A lot of political heat, but boy, 180, something like that. 180, and if we could get this on this daily 920 crossover, down in here, maybe trend down another month, get our crossover there, boy, we could build a real solid trade. a real solid trade. So something to think about there. Let me see, Abram, watching from South Africa. Right on, right on. No, I've never been to South Africa. I actually have talked with quite a few traders from down in your region. So there's a lot of folks down there that love to trade and take the markets very seriously. So you're in a good region for trading, that's for sure. Tesla has earning, I think, Tuesday. Yeah, I think you're going to go lower, Sherry, no matter what on the earnings, on Tesla earnings. I think it goes lower, and I don't think there's any question about it. Right now, you're trending down. It's going to take something to really spin this thing to really a favorable scenario for Tesla. Now, Netflix is sort of the opposite. Netflix had a big time earnings report yesterday. Came out. They beat the top line, they beat the bottom line, but the earnings beat. It was a beat by about 16.5%, which is huge. If you guys trade stocks or if you've ever been in the stocks, you beat earnings by 16.5%. And they also had a bottom line win too in revenue. They weren't expecting to really win in revenue. Now you say, well, Shane, how can you beat earnings that bad and then not beat the revenue? Remember, Netflix has been spending a ton of money on live events. The Tyson Paul fight, that was not cheap. A lot of new WWE, for instance, the wrestling, that's expensive. All that stuff's real expensive. Netflix is not afraid to spend money, and it shows. I mean, they brought in an estimate of revenue of $10.54 billion. They won by just a few, but that's a huge revenue. But they also spend a lot. So to see their earnings really blossom with revenue that only came in a little bit above expectations, that really suggests that this company's in a pretty darn good fiscal position. And I would be looking for this to rally. Now you say, Shane, why? Well, I'd say, listen, your 920 crossover, you had a buyback here. You really rode this thing right up over 1,000, right? 1,060, came off. You had another buy right here, which was just a flat-out loser, just an absolute flat loser. And now you've got a buy really from the same basic area. Markets have memories. Is this the third time? Is the third time a charm where we get the big breakout for Netflix? I think it's possible. You could definitely see a revaluation of this company as we move forward, especially with the earnings beat. However, they do spend a lot of money, an absolute lot of money. All right, let's talk a little bit about holiday trading, and then we'll get on out to our U.S. dollar and our Forex. We've also got really a huge event that's developing here in the monetary policy sphere in the United States. And I'm not going to really say I told you so, because I'm not that kind of guy. I'm really not. I listen to these commentators all day long, and they spend half of the day saying, I told you so, we were right about that, we were right about that. I think it's important to show some of the trade ideas that we have that were sort of good calls, just to sort of validate that we know what we're doing here. But this call was a pretty good one, and I went out on a limb during the last FOMC Live and pretty much told you what I thought about Jay Powell, and it looks like those predictions are coming to fruition and may actually happen. So I'm fascinated. In any case, it's Good Friday today. Holiday trading is difficult, and a lot of people run into trouble when they start talking about all the different ways they like to trade. And I know that sounds like a riddle, but they really run into trouble saying, okay, well, I like to scalp. Great. Do you know what you need to scalp properly? You need deep markets and volatility. If you don't have those things, you're going to run into trouble. Bottom line, you don't have those today. You can't scalp today. I'm sorry, you just can't. If you made some money doing it this morning on some Forex pairs or during the overnight, during the London session, then great. I'm happy for you. Congratulations. Just understand that when we get into situations where there isn't as many sort of punters, I guess they call them in Europe punters, or I call them traders. If there's not as many traders, then there's not as much liquidity. And when there's not as much liquidity and the market depth really lags, then you get big institutional orders or just big traders that come in and say, okay, I'm going to go ahead and buy, 200 lots of XYZ. I'm going to go buy 200 lots in a big block order. And it really does move the market. And the reason why is because there's nobody to really absorb. There's nowhere to really absorb those orders. And one of the guiltiest things is the gold market is bad for that. You've got to make sure you have maximum liquidity if you're scalping gold. And we've been dealing with a lot of volume in the gold market lately, so it's been pretty good. But today is not the day to be doing that. So limited liquidity makes holiday trading very difficult. Slippage. I just told you about the block orders sweeping price. You got to understand that I could be looking to sell. If I'm looking to sell you something at 100 and you're not there, that means what? I have to make a decision. It means that I'm going to get the worst of the deal. If you're not there, if nobody's there at 100, I don't have any sellers at 100, that means price is going to go till they find some sellers. It's going to be really difficult. So just always remember that every time you order, your order has to be matched at the market or else it won't be filled. We call that being left holding the bag. So one more time, if I want to go ahead and I want to sell, I want to exit my position at 100, but there's no buyers there, there's nobody to match my trade with, I'm in trouble. I'm in trouble. That means I either have to go ahead and adjust my price to reflect what is at the market, or I just got to leave the position open. Now, if there's nothing at the market, if there's nobody sitting there waiting to take the other side of my trade, it's called holding the bag. And basically that's what slippage is. You get caught holding the bag. They're not letting you out. And also it can be tough to get in too. If I want to buy hundreds at market right now and there's nobody that wants to deal with me, then I'm not going to get in. Slippage pretty much makes all scalping strategies moot, especially if it's a big one. If you're looking at 3 to 4 to 5 pip slippage, something like that, and it can happen, believe me, then you can't scalp. And you just got to realize that. So be very careful on days like today. The wide bid-ask spreads, I don't have to tell anybody about wide spreads. Wide spreads are really difficult. They cut your profitability down, and they make it that much harder to get these trades into the green. And when you got big spreads, you almost have to be looking at position trading or maybe swing trading. Choppy price action. The markets won't have a direction. Typically, they trade sideways and in a choppy fashion. That makes all of your intraday strategies, unless they are rotational, meaning you're going to go ahead and try to play reversions back down to that mean. If that's the case, then you might be all right, and maybe. Problem is you won't get filled. That's holiday trading. That's why I highly recommend just taking the holiday off. Today's Good Friday. You'll see we have market closures everywhere, pretty much across the board. So liquidity is limited, but the bankers are still trading currencies. Easter Monday, this is what I want everybody to understand. The markets in the United States will be open. You will be open for business. You will be able to trade Easter Monday here. Now, I don't know what's going to happen with the liquidity. You'll notice the last item on this list. Most international venues are going to be closed for Easter Monday. A lot of folks take the whole week off, and that's great. What I'm saying is I don't know what's going to happen yet on Monday. We are just going to take Monday off as far as live streaming goes. We'll have a trade idea, maybe some synopsis out, but we'll be back in the saddle Tuesday when liquidity resumes. Last thing I'm going to say is those IMF meetings begin on Monday, and you can bet that those International Monetary Fund, those meetings are going to be more important than they've been in a long, long time. And the reason why is Trump, trade war, tariffs. That simple. So that's what we're looking at for the immediate future. Now, business will pick up Tuesday, and we will have, I would say, optimal trading conditions Tuesday, Wednesday, Thursday, and that's when we're planning to stream. Let me see. T. Marina. Let me see. Sherry, I trade NQ futures. Yeah, absolutely. NQ futures, we had a pretty good scalp the other day on NQ futures live that we were showing the 5-8-13. If you haven't seen it, check it out. It's about the 20-minute mark of that stream. Pretty good stuff. NQ daily. Let me see. Yeah, Shane, I have not successfully won today. Yeah, you don't want to be trading today. I know it's hard, though. If you're a trader, you trade. That's how you make your money. You got to be in the market and you got to be trading, but it's really a challenge today. Really a challenge. Let me see. Plenty of buyers and sellers in the NQ. Well, I don't know. If you did well today, well done. But as far as NQ futures, there's typically a lot of volume in there, and that's one of the reasons why I trade futures, guys. That's why I trade futures almost exclusively, but I do know my way around a Forex chart. That's for sure. Right here, U.S. dollar, Japanese yen. I pull this chart up, and most people say, Shane, you're pulling up a yearly chart? And I go, yep. And the reason why is we've got just an absolute huge support zone that we would really be foolish to overlook. I mean, this is an absolute dandy zone, right down there, right around 138.65-ish, somewhere down in there. The reason that red line right there is going to be 2024's low, last year's low. You're going to have right there at 139.57, 138.63. So that area right around that 38% retracement, that's a big deal. That's a big deal. Now take a look at last year's complete range. We've almost filled it all the way in, and we're only, 3.5 months into this year. That's not an accident. That's how price works on all time frames, really. But the longer time frames, you really get to see what's happening from a macro perspective. And I really value that because it's important to understand that market dynamics are market dynamics. But a lot of us get carried away. We want to trade 1-minute charts. The example I did, the scalping example the other day with the 5-8-13 EMA, that was on a 15-second chart. We all want to do that stuff and sit here and ride the lightning and just watch our money stack up every day. I'm just telling you, it doesn't really work like that. You're going to have to focus on your approach and how to make it profitable. Sure, and on strategy and all that's great, But I will tell you that the longer time frames typically give us the most reliable information. The problem is retail traders, we don't have enough money to trade. How do you take this trade right here? I'm going to scalp it. I'm going to be looking at 138, 138 and 3/4. In my view, you'll see a little bit of a washout beneath last year's low, which is right at 139.75, but 138 and 3/4, probably 138.75. That 3/4 handle, that could be a real beautiful trade, and that's going to be one I'm looking at for early next week. Shane, we're trading 142. We're way off of that. I go, this can happen quickly, and the reason why is the dollar's getting absolutely smashed. I mean, this right here was a chart that I put out, I don't know, not too long ago here. I didn't put it out here, but I put it out somewhere else. And this is really what we're talking about. This is the ball game. This is the single biggest casualty since Trump has taken office, for whatever reason, has been the U.S. dollar. The U.S. dollar is absolutely tanking, and it's really coming on the heels of a lot of tariff talk, a lot of questions about what's going to happen in the world of currency, what's going to happen to the U.S. dollar. It's losing a lot of puff, and the reason why is we've seen a divestiture in America equities. We really have. I mean, you've seen all the markets pretty much falling consistently. The U.S. 30 is no exception. It fell again yesterday. U.S. 100, U.S. 500, these are all in a bearish formation, and the U.S. dollar is no different. Now, typically, when you see the dollar go down, you'll see stocks go up. We're not seeing that. What we are seeing is things like precious metals, the Swiss franc. It's clearly a global shift of liquidities. You're shifting money out of the United States assets, and you're putting it into safe havens or foreign assets. It's that simple. Now, I'm not saying it's right or wrong. I don't know who's driving the train. I can tell you that this dollar fading right now really says to me that the Chinese are selling a hell of a lot of UST bills. That's my guess. And, I think it's a pretty darn good guess. I think that guess I would put up against anybody on CNBC. I think a lot of those companies, and specifically the PBOC, the People's Bank of China, which is run by the government, we all know that. So, you sort of have the communist regime running your bank. They're going to do whatever they see as in the greater good of China, and also to really sort of undermine a potential trade war. How do you hurt a trade war, or how do you try to get the upper hand? If you're going to devalue the other's currency, theoretically that devalued currency is going to make that country's exports hyper-competitive abroad. Well, how do you fix that? You slap a bunch of tariffs on it and make sure they can't sell it. You see what's happening and how complex this is? I have no clue how it pans out. I'm just going to trade it and wait and see. I mean, if you don't see trade war resolutions in the next 90 days, then we're going to go into something very severe economically. But I have a feeling there's going to be a deal. Won't be shocked if they announce a deal this weekend. We just don't know. Let me see, Eli. Let's see, Eli. Great Britain pound, absolutely. We'll look at the pound here in a second. But that's really what we're looking at for the U.S. dollar. So we've seen a big downtrend in the USD. 2023's low was right there, coming off of this sort of markets have memories, right on that spike, and that's what we're testing right there. If, in fact, this area, if these bidders don't step up, and it doesn't look like they are, then we're going to trend down, and we're going to start looking for another base. My guess is the next stop will be 95, and that will represent severe damage to the U.S. dollar. It's just the way it is. That's just the way it is. All right, we had a question about the Great Britain pound. Great Britain pound USD. This is absolutely a fantastic chart. You can see that some great trades. We've outlined them earlier this year. We really did. Came back. We had really just a nice compression area right around that 38% zone. Really beautiful scalps there. And then we just blew. That right there is why I don't trade 50%. We blew straight up. But look at this compression. This is really sweet. I mean, this is a weekly chart. Great compression right around this. These are monthly Fibonacci's just to show you real fast where I got the levels. But this right here, those levels are pretty darn good. But right now, it's bullish. It really is bullish. So if in fact, you aren't already long, which many of us aren't, what could we really want? What would we want to do? Do we want to get long? I mean, is it a deal? Is it a sell? What is it? Well, the first thing I would be looking to do is get rid of those because they don't mean anything anymore. It looks to me, once that 78% line breaks, you're going to go up and challenge this type of this swing high here for sure. So I'd almost guarantee that we go that high right there, 134.34, and that's going to be the high of 2024's high. It looks to me like we'll go up and check that out without much issue. So a couple of ways to trade this. I would anticipate some short-term selling. I wouldn't really, be against anybody that wants to scalp right up in front of that, maybe sell right in front of 134 and try to get that pullback. I really wouldn't, blame you. Just you'd have to stop yourself out right in here relatively tight because you don't want to get into what looks to be the beginning of a major breakout, a major like a game changer, sending the U.S. dollar down to about 95 or maybe lower. So we don't want to get in the way of that. However, on the other hand, you say, okay, well, we still got room to this potential swing high, this resistance zone. Can we buy it? I'd say, yeah, I would want to buy it. I think if I have a chance to buy it, I would buy it. Problem is, you don't really have any pullbacks to work with. Now, with this much green on the chart, and this is, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days into the green. This is going to be what, 10? Yeah, it looks like it's somewhere in there. What do we want to do right now? Holiday session, rolling into the Easter weekend. Be really hard to do anything. But I would rather buy. So if I was trading right this minute, and that's a tough proposition, what could you really do? What's going on here? Well, we'll get back to that here in a second. Internet problems all week long. They've been disconnecting my paper trader. So if let's say we wanted to trade right now and sort of give you a good illustration of what's going on. What's the spread? You'll notice right away up in that upper left-hand corner, your spread's about 4 pips. So, I mean, just for us to even make money on a buy, this thing's got to tick higher up past 186. Do we even get that kind of range? No. It's a bad trade. It's a terrible idea. However, I would want to be long. I really would. I would want to be long as opposed to short, and I think that we have an opportunity potentially to get there. Now, what I would be looking to do on Monday is I would let that orb, a lot of folks love that opening range breakout. I would wait for that Monday open, and I would say, okay, 4-hour chart. I want to see where those first 2 bars set up. So we'd be here. And if they, let's say a 4-hour chart sets up here and here. Okay, that would be my orb. And I would play a breakout either down or up. Now, if we're taking the counter trend trade, which is not what I want to do, but if in fact that was to happen, it's a structured counter trend trade. Stop loss, you're going to put right above your signal bar or above the range, depending on how big the range is, and then just give yourself a shot to make a little bit of money to the downside. That's how I would be approaching this Great Britain pound. But as far as right now goes, I mean, we could pull up, I could pull a macro level. I would say that's potential resistance right there, 2024's high. In my view, if we do break through that, you can see what happened back here in May of 2021. That zone right up there, probably going to be your next port of call up there right around 140, which is about above 2024's high, about 500 pips higher. So, I expect a little bit of short-term selling right here. I want to find a way to get long at least to 2024's high. If you want to scalp in front of that to the short, that's cool with me. These are going to be very short-term trades. I want to see what happens right up there, right around 134.50-ish before making the decision whether to play the break up to 140 or to maybe see another intermediate term top set up for the next 6 months. That's the Great Britain pound. Hope that helps. Let me see. Team Marina got way behind on the live chat, guys. My apologies. Team Marina. So when slippage gut punched me, the order price was not too far away from my target level. So I was negative the entire position. In a case like that, would setting a stop loss in hopes to break even be ideal? God, it's so hard, Team Marina, because I would say that, yeah, if you could move to break even, go ahead and do it and see if you could just get out because the trade isn't going real well. You could definitely say that. The problem is being consistent with it. I'd say, okay, yeah, move it. The problem is those spreads, the way that they vary and the way that they change and the way that slippage evolves, especially in OTC markets, I don't think that you're going to get any consistency out of it. So if you went to break even, you could do it. I just don't necessarily know that it's going to pay you off in the long run. I think you would just be better off on a slippage trade. I usually just let them play out when I'm trading gold futures and I get slippage by a few ticks, 2 or 3 ticks. A lot of times that really breaks what I was trying to do, just smashes it. But I let the trades play out because it's like, well, I mean, I don't know the slippage before I get into the trade. That's why I'm really trying to stress focusing on trading during optimal periods. So if, let's say you're scalping Forex pairs, you need to be doing it around opens. You know, you could either do it around the Asia Open, the London Open, the U.S. Open. The U.S.-London overlap is probably a premium trading if you're going to trade any of the majors. And also the Australian Open's another one if you're trading the Aussie. But you want that liquidity in the market, and I know it's hard. I know it's hard to understand, well, when's everybody going to trade? So what we try to do here is show you the key events and the days when people are most likely to trade. And right now, everybody's trading everything because of the volatility and the uncertainty. So you definitely want to be careful with messing around with your approach. Let me see. Eli, do you like the Great Britain pound Australian dollar? Yeah, we can go ahead and look at that one, and then I'll look at the Euro USD and any other markets you guys want to look at. I had a few ideas with the Euro USD. And let's see. We have one other question there. Stay Greeny. Are you rich from trading, brother? Am I rich? I don't know. It depends on how you define rich. I mean, I'm not like the guys on YouTube or the gals on YouTube that sit there. I follow one gal. I watch her trade. She's pretty smart, but you know, the numbers. You know, I made 30 grand last month, or I'm up 300 grand this year, and my goal is 1.2 million. And I start thinking about all the different things that have to go in to that mentality, and I go, well, I mean, you know, if you're trading 300,000 to make 1.2 million, it's possible. It's very possible. But typically, if you're going to put that much glimmer in play, you're probably already worth a few $1 million. There's an old saying, Stay Greeny. What does it take to make a fortune in the markets? A small fortune in the markets. So the saying, I messed it up. The saying is, what does it take to make a small fortune in the markets? And the answer is a large fortune. So there's a lot of rags to riches stories. I managed to stick around. I will say that. I'm not going to tell you exactly my net worth, but I'm doing all right. Rich, yeah, still healthy. That's pretty good at 46 years old. I'm happy about that. Rich in knowledge. Yeah, well, I mean, I've been around this stuff so long, Eli. So long. Let's see. Let's go. I hope that answers your question, Stay Greeny. I'm not dodging it. I'm just not going to tell you exactly how much money I have. I can tell you, though, I have worked construction. I was a construction worker for a long time, and I also worked in the oil fields. So I've come from a blue-collar background, and I know what it's all about. I know what putting the tool belt on for 10 hours is all about, believe me. Let's see. Funny math. Hey, Shane, love your videos. Thank you for everything. I'm having trouble understanding ticks and why which tick you enter on matters. Can you help guide me? Yeah, sure, Funny. Let me see. T. Marina Shane getting a bunch of Ram truck ads across my YouTube. I don't work for Ram trucks. We have one, though. Okay. Thank you for everything. Understanding ticks. Okay. So let's do this real fast, and then I'll go through these markets, and we'll call it a day. Good question. Funny math. Okay, if we're trading, where's my other? Let's get a better market than that one just now. We'll get back to that one, though. Okay, so these are fractional. These have fractional pips, but in the Forex, a pip is just the smallest unit by which this thing moves, by which price moves. That's all it is. Now, the Forex is a little bit harder than futures because futures, I'll show you what a tick is in futures, but theoretically, these are called fractional pips. So that's a pip divided into 10 pieces. So that's a fractional pip. A full pip would be like 139.20 to 139.21. See what I mean? Or excuse me. So that's essentially what you're looking at. 113.92 to 113.93. So that would be a whole pip. That's just the smallest increment that these things move in. Now with fractional pips, they're even smaller increments. With ticks, which is what I like, and when I talk ticks, I'm talking about the futures markets. There's WTI crude oil futures. This is easy. It's a tick. 64.69, 64.70. It's a tick. That's it. It's the smallest increment by which something moves. So in futures, like say crude oil is going to be 1 cent. Let's say we have scalpers in here that are scalping the NQ. It's going to be a quarter tick. Each point is divided into 4 ticks. So that's essentially what it'll be doing. I wish the market was moving so I could show you exactly how the market's moving and what a tick really is. Like this one, YM, E-mini Dow, 39,383, and the difference is 39,384. That distance right there is 1 tick. So the tick is just the smallest increment by which price moves. Now on the Forex, it is different because you have a pip, which would be 132. Let's say 132.86, all the way up to 132.87. That's going to be a full pip, but inside of those pips are fractional pips. Sort of ignore fractionals, but they can have an impact if you're trading enough leverage. A lot of scalpers do fractional, play fractionals. I don't. I think it's just way too small. Way too small. All right, Great Britain pound, Australian dollar. I hope that helps for you. Funny math. I know it's tough. There you go. All right, guys. Let's go with a little bit of a breakdown here. Great Britain pound, Australian dollar. A lot going on. Clearly, a lot going on globally. You really wonder how these cross-currency pairs are going to be traded. You really wonder about how many folks are just going to sort of get away from the dollar and start looking for a better pony to ride. Take a look at this one. I mean, you're looking at what, an 8.6, a 9.5 spread. That's, I don't even think that's tradable in my book, but you certainly can do it. You just got to adjust what you want to do. You got to take more points. You can't really scalp 1 or 2 pips with a 9-point spread. I don't know how you would do it. Something like this, though, huge. I mean, you definitely see what's happening here. I mean, you got incredible volatility this month. A lot of it has to do with the gold market. Remember, gold's a market driver for the Australian dollar. So when you got the Great Britain pound against the Aussie, you better be watching the gold market too. As gold goes up, that Australian dollar is going to gain strength, and that's exactly what this tale is all about on the monthly. So I always pull monthlies because I like to start my analysis top down, monthly, weekly, daily, and then we get into the intraday stuff. Well, right there, you've got big time support at 206. Somewhere right in this zone right here, 206.79. That's key. I would circle that zone. That's really a big-time level. Let's go down to our weekly, though. I think you're going to see that since gold's been just on a mad dash, and that's exactly what's happened in the last week or so, there's bang. Gold breaks out. What happens? This one turns around in a big, big way. We've also got another Fibonacci retracement right there, spike low to a spike high. I'm just not getting the convergence that I want. I was hoping those levels would line up. But this zone right here, probably going to be pretty good support. That was going to be our macro zone right there, 206.84 and then 206.01. So that area right in there, there's probably going to be a heck of a fight in there. So let's get rid of all this complex stuff and figure out what's going on right now. Okay, very tight week, rotational week, and the reason why is the gold market. Gold is prompting a correction in this currency pair. The traders are sitting around, they're saying, okay, what do I want to do? What do I think of gold? Do I believe gold's going to go higher? Because if it does, this market's going to go lower. That's just the way it is. As gold gains ground, the Aussie is going to gain ground on pretty much all global currencies. So when we look at this, we say, okay, that's very tight. What can we really do? Do I want to buy it or sell it? Nobody knows. Look at that weekly range. That pales in comparison to the last 2 weeks. Business has slowed down dramatically. So, number one, you could still say that we're bullish, but not as bullish as we were. We're still above that 38% level. So I would say that the uptrend is still technically valid. Something like that. Well, maybe not. This is a weekly chart. It's right there, weekly. Monthly, you're still bullish. That's for sure. So you're rotating sideways. What do you really want to do? Go down to a daily? I mean, that's a killing field. I would avoid this one like the plague, guys. Stay away from this. Look at what you've got here. We're trading inside of the 13-period EMA and also the Bollinger midpoint. Bang, 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 bang. You say, Shane, can I trade it? I can tell you how I would trade it. Sell that moving average on the daily. Buy that Bollinger midpoint. So buy 207.50 and sell 208.40. That's a 100 pip range. That's probably what I would focus on. But just remember, when these markets coil up like this, that's how price works. It extends, it coils up, and then it breaks again. So you're seeing a real flat market conditions there. I think that you're in for a breakout. Let me see. Yeah, spreads because of the holiday. Absolutely, Eli. I agree. I was able to catch a 500 pip long. Fantastic. Good work. Let me see. Funny math. I'm trying to find the optimal tick to enter in on and when making a trade. If it's bearish, do I execute a trade a little bit above the current price to get the most out of my money or vice versa? It depends on how you're trading, Funny. If you're going to go ahead, it's a good question. If you're going to trade support and resistance levels, okay? Like let's just as an example. You don't have to use Fibonacci retracements, but just as an example. Let's say I wanted to sell above price. Then I would be looking to enter. I would put a limit order down with that price for my tick. So I would put it on that. I would put it right there on that pip wherever I wanted it, wherever my resistance level was in this case. And the idea is if price goes to me, then I'm going to go ahead and sell and get in on the pullback. That's one way to do it. Now let's say I want to play a breakout. I want to be bullish above yesterday's high. In that case, I'm going to look at yesterday's high, which is 208.85, and I'm probably going to go ahead and maybe put somewhere right around 208.86, something like that. Right above that, with the idea being we're going to get in on that breakout. So in one respect, it's going to be like a stop market order or a stop limit order right above your key level to play a breakout. But if you're going to play a retracement, say you're looking for price to go up to this level and then come back down, then you're going to use a limit order. Remember, your limit sell order is going to be above price, limit buys are below, and then you're going to go ahead and play breakout accordingly. Stop market buys are going to be above price, and stop market sells are going to be below price. Order types can be tricky. Keep it real easy. Pending orders. You can use pending orders on the Forex. I could go on all day, Funny. I hope that helps. That's a tough question, though. I mean, we probably should. We have a bunch of videos like that at How to Trade Trading Academy. Go ahead and check those out if you want. All sorts of stuff. What's a pip? Where to put your trade locations, things like that. Hope that helps. If it doesn't, then go ahead and cruise on over to How to Trade and ask me a question. I'll see if I can help you there. All right, guys. I do want to cover this Euro USD and then one last thing, and then we're going to go ahead and sign off. Euro USD, huge breakout. Looks a lot like the Great Britain Pound USD. It's not. It's not quite. I think we've got a chance potentially to get a major pullback in this one, probably before the others. Now, if in fact we're down here right at 109.77, 110 even, that's great. We're still about 400 pips higher than that. So we've got to figure out a way to get long. You'll notice we've broken out sort of above that upper Bollinger Band. That's big for me. That suggests that, yes, we are trending, and we're trending heavily, which pretty much everybody can see. The question is where do we want to trade it? Early next week, I would love this. Maybe the dollar kicks back a little bit, gives us a chance to take maybe a retracement. So something like this. Spike low, spike high, 38%, right around maybe 112. That'll be a pretty good bid. Now, that's still 200 pips down. So let's take this down to a daily. Do we have a chance to maybe buy in? I want to buy. I don't want to sell. I want to buy. Still very difficult. Most current spike, boom, boom. Do you really have anything there? I might have to go to a different tool to see if we got to buy. I want to buy. I want to buy this thing. Let's go to our 920 crossover. We're late. This one told us to buy back on the 13th of February, so crossover is really no help. At this point, we would just have to basically wait. We would have to wait for a pullback. I would probably be looking at that 4-hour orb chart again to open up next week's trade. Opening range breakout. I think that's probably the ticket. If not, I can certainly establish some nice levels this way. Boom, boom, right there. Spike low, spike high, pullback. You can see that's absolutely beautiful. So maybe 112.60s, that's definitely worth considering. We just have to wait and see where these things open. That's for sure. All right. Go Dolphins. Thanks, Shane. Go Dolphins. Absolutely. Absolutely. Hamu, good to see you, Hamu. Team Marino, I don't see a buy. You don't see a buy in the Euro USD. It's got to pull back from where it is, as far as I'm concerned. But I'm not ready to buck this trend against the dollar until we see some real prima facie evidence that something's going to change. And this is sort of what could be. I don't like saying "I told you so." I don't believe in it. I think as soon as you think you've got everything figured out, you don't. As soon as you think you got the markets figured out, you don't. And this right here is something that I talked about in the last FOMC Live. I said this is Jay Powell's last year in the Fed. Now his term's up in 2026. I think they're going to force him out before that, and there's a lot of ways that he can be forced out. Now, one of them is decommissioning the Fed. Congress has the power to do that. Remember, they were brought into being in 1913 by the Federal Reserve Act after all the bankers met at Jekyll Island off the coast of Georgia. When you have a body that's independent of the federal government but runs the nation's money, there's always going to be conflicts. Now, most presidents and most politicians in general, they let the Fed do whatever they want, and they tiptoe around the Fed. Trump doesn't. Trump goes in there with a flamethrower. He can't stand Powell. He doesn't like him. He wants rate cuts because he knows that you have to have cheap money to provide the liquidity to make the economic growth targets that he's really put out there develop. And so when we start talking about, yeah, but there really isn't anything you can do, yeah, there is. Now, in a presser last September, we covered it live here. Jay Powell came out. He was asked point blank, said, will you step down, and can he fire you? And he says no and no. That's not necessarily true. He can be fired. Powell can be fired. The question is how does that work? Well, Trump calls for Fed Chair Jerome Powell's termination, and he basically said he wants him out. He wants him gone. He's not getting the job done. They want rate cuts. And there you go. Always too late. The Powell is always too late and wrong. He insists the Fed's chairman termination cannot come fast enough. So that translates into this story today. Trump will study whether to fire Fed Chair Powell. Now, the threat of termination sort of is going to make people do what you want them to do anyways. So the idea is that, hey, listen, we're going to apply some pressure to Powell. Maybe he'll start dancing. Maybe he'll cut rates. Maybe the Fed will cut rates instead of declaring war, with the United States executive branch. Well, they're studying whether they can do it because, number one, it really is unprecedented for about 100 years. Now, can they, in fact, fire him? And the answer is yes, he can be fired. There's a provision in the Federal Reserve Act in 1913 that says that Jay Powell can be removed for cause. So the question is okay, what is cause? How do you establish cause to where you can terminate Jay Powell? I think what the government and what Trump and the Trump administration is going to do is they're going to build a case based on Powell's public comments. The things that he said earlier this week were very out of character for a Federal Reserve chairman. They were very out of character. You don't speak like that. Especially, he addressed the Chicago, what was it, Economic Club or whatever, and said that you're going to see higher inflation, you're going to see higher unemployment, and you're going to see economic growth slow. And he basically attributed it all to the new policies and the tariffs and all that, which, most economists agree with that. I don't necessarily know that to be true. We have to wait and see. But for a Federal Reserve chair to say that and basically signal that the tariffs are going to boost inflation and we're not going to cut rates like we said we were. As soon as he said that the unemployment rate was going to rise, he had to know that they weren't going to cut rates. So it was really a shrouded thing that he said, but the markets reacted and the Dow plunged 700 points. That's going to get him fired. Can you remove Jay Powell for cause based on that? You could build a case. You could say that it was reckless. You could say the public commentary was reckless. Again, that decision is going to fall more than likely with Congress. Trump can fire him on paper, and they can have a big legal battle. Eventually, that'll have to go to the Supreme Court. But what that will do is that will shake up these currency pairs. That will shake up the U.S. dollar, which is just in a tailspin because nobody will really know what to do. Now, the other thing is they could decommission the Fed. Congress can decommission the Fed. And if they, in fact, do that, they take their charter away. They revoke their charter. Who knows what happens to the dollar then? It may be good long run. It may be horrible short run. It may be really an evolution in our global currency system. That's for sure. The last thing I'm going to leave you with on this story is this. This is a big one. The shareholders of the Federal Reserve Do some research and find out which banks are actually a part of the Fed, which ones really control the Fed as a unit. The United States Fed, or excuse me, the New York Fed's a big one. And take a look at some of the largest shareholders in those banks, and you'll find that they are the largest shareholders in a lot of global central banks. So what you're talking about when you decommission the Fed is a basic restructuring of your monetary system. And I mean, just off the top of my head, I think that's one of the market drivers of this right here. I mean, a lot of people are wondering why gold keeps going up, up, up. Well, the dollar's down. That's number one. You've got potential wars breaking out or escalating or whatever you want to say, but you've also got a potential restructuring of the global economic, not necessarily economic order, but the global monetary order. And if that happens, if let's just say the Fed gets dissolved, a lot of folks decide to de-dollarize instead of accumulating dollars, which has been the norm for the last 100 years. People decide to get out of dollars and maybe take euro or anything. Rubles, you'd probably see a big kick in the Russian ruble. If that is to happen, what is an ounce of gold worth? It's probably worth a lot of dollars, huh? This is probably the most fascinating chart out there, and it's gold. Gold's exploded in price. Any chance we get to buy a pullback, buy it. 32.08. I can't tell you that though. That's against the rules. I can't say what to do, but I mean this is beautiful market structure, guys. I mean for a Fibonacci trader, somebody like me that just goes, okay, got a nice little swing low there, got a swing high, beautiful. Bang, bang. 50%, but you're good from 38%. Buy pullbacks. Can't beat that. All right, everybody, I got behind on the questions, but I'm going to go ahead and sign off on this Good Friday. I know we ran way long, but I could talk Federal Reserve and talk economics and global orders all day long. Let's see. Eli, try MACD. MACD's good. I like MACD. We typically are using RSI for its simplicity as a confirmation device, especially on those crossover trading strategies. But MACD works great. A lot of folks love MACD. How you sure did call it. Yeah, Team Arena, we were on top of that. I think Jay Powell's gone by the end of the summer. I really do. It's either that or he's going to play ball. If he starts cutting rates, then he'll be Trump's best friend. If not, they're going to try to remove him. And it may be time for him to go, too. It may be time for him to go. Let's see. Hey, today I was bullish on the USD, but my stop loss were hitting the Euro USD and Australian. Yeah, it's a tough day to trade. It's Good Friday, hey, with a lot of liquidity out of the market. Thank you for the gems. You're welcome, Eli. Rothschild Dynasty, Team Arena, you said it. I didn't. Hey, I didn't say the big R word. I didn't say Rothschild. You did. Don't come looking for me. I didn't do it. All right, everybody. I want to thank you for joining me this week. Our stream schedule is up in the air as of right now. Like I said, I've been promising we're going to add more streams on other platforms, and we are going to do that. But next week we're going hard Tuesday, Wednesday, Thursday. So be here and be ready for that. Those are going to be at 1 p.m. Eastern each day. So that's going to be real easy to tune into. And if you miss them, you can always catch them. You can either catch them in the trading room in our past streams, or if there's a problem with that, go to our YouTube channel, How to Trade Calm. They're cataloged there. They're also cataloged on Forex Signals TV on YouTube, and they're on Twitch for a few days, I think. And then you can go to my Twitter feed, which is out there on X at ShaneV_Trader, and that'll get you all lined up with our most recent webcast. Got a lot of great feedback on the 5813 workshop. We're going to be doing some more workshops. Actually, it's going to be Workshop Wednesday. Next Wednesday, we're going to do a 920 EMA crossover workshop, and I'm going to execute some trades live. We're going to use RSI as confirmation, talk a little bit of theory behind that, and then I'll have to do a complete market scan at the end of the stream. That's just sort of what we need to do to make sure that we're on the lead lap. All right, everybody, I'm going to go ahead and sign off. Thank you for joining me today. You have a fantastic Good Friday. Enjoy your Easter weekend. If you don't show up to trade Monday, that's okay. It could be a very, very tricky session, maybe one of those that you're better off just game planning for the week ahead. All right, as always, trade well, and we'll talk soon. See ya.